Alright, welcome back everyone to another video. To start off today's video, I want to talk about a graphic that I've seen around for the longest time, and I want to clear it up and explain to you why it doesn't actually matter, and it's actually a good thing that it is the way that it is. So the graphic I'm talking about, you may have seen this, is this, right? The casino gambling versus day trading. It says 13 out of 100 gamblers leave the casino a winner, but only 1 out of 100 day traders reliably beat the market. You may have seen this, you might not have seen this. And I want you to understand that that's the whole point of trading, right? It's supposed to be that way. It's supposed to be hard, and it's supposed to be so not everyone could do it. Think about how this works, right? If it was random, right, then you would expect half the people to walk away and win and half the people to walk away and lose. But because we know that such a small percent, I don't know if it's actually 1 out of 100, I think it's more like 3 to 5%, but it's such a small percent where it's like such a small percent of people are beating the market, we know it has to be algorithmic, because if it was moving randomly, then there's no way that only 3% of people would be profitable. It'd be half the people would walk away profitable. Like it would look like this. It would look like the casino gambling one, right? So because the market is moving systematically to make as many losers as possible, that's why it's so much lower, and that's why you can win, right? That's the whole point of my videos. That's the whole point of everything I'm trying to say. It's just like becoming a doctor, right? It's just like becoming an expert in any field. You're going to have to put the work in. You're going to put years of work in if you want to do this. But what I'm saying is this proves that it's possible, because if the market wasn't algorithmic, this would not be the case, right? You would not see only 1 or 3 or 5 out of 100 traders. It would be a lot higher. It'd be random, right? It'd be 50-50, but it's not. And that tells you most people are losing because the people that are winning are making so much more. So anyway, that's the rant for today. Let's get into the charts and talk about what we got going on. So today was a no news Tuesday. Days like today, they're always going to be tough, and it's just like yesterday, just like Monday. You got to go into the market, be defensive, because we don't have news. We don't have that injection of volatility. So what's going to happen on a day like today? We're probably going to generate liquidity for later in the week. And you can see that's exactly what's happening. Look at how every time we come up to these highs, we fail. We fail to break it. And why is that? Because it's a no news Tuesday, right? So we're generating liquidity for later in the week. Now, we do have news Thursday. So maybe we'll go run that liquidity on Thursday, right? But this is how you use the economic calendar as your guide. I mean, that's how I see it, right? So now let's talk about this. So you'll see this happen a lot, where you'll aggressively pop higher. And by the way, this is a daily fair value gap right here, from here to here. And look how aggressively we're expanding up, right? So I was expecting this daily fair value gap to hold, especially because look at the other side of the chart. What is this? This is a giant accumulation range. So I'm expecting us to run right through, right? Because all of these people that were short are getting stopped out through here, right? Think about it. Anyone who's short, as it comes up, they're getting stopped out. So I was expecting this daily fair value gap to hold. So I'm going to click on this. And let's go ahead and mark this out. Daily fair value gap. And then going down to the 1 hour, we ended up getting SMT. And when you get SMT like this in the daily fair value gap, you can really confidently frame a model. Now, I know I'm not going to get into this because I talked about it, but I basically said, hey, We got SMT here. This is probably going to be a buy model, and it ended up being a buy model, right? We ended up getting 1 hour change state of delivery, and you can see we went right up to this high right here, which was previous week's high. So this was the draw on liquidity, and you can see we went perfectly up to previous week's high. Does that look random to you? Or does it look like everyone in this accumulation range is getting stopped out from this move higher? This is what an algorithmic market looks like, right? So the market was driving up to take out this draw on liquidity, previous week's high. And boom, we go up and take it out. All right, let's go into the charts a little bit more. Like I said, this is a higher time frame buy model, but we had this giant move higher. So what does this mean, right? Anytime you have a giant move higher, it's essentially as if this price action is non-existent. This is like a void. This is essentially a liquidity void. This is non-existent price action right here, because you got to think the market in terms of liquidity, right? Are there any in a consolidation? That's where orders are generated. People in this giant move higher, they're not just going to be sitting resting orders, right? So anyway, basically the point, you might not understand it right now, but the more you watch the market, the more you look at it, the more you'll understand what I'm talking about. But for now, just understand that anytime you have a giant move higher that looks almost instantaneous, treat that like a void, because these are going to want to get filled back in. And you can see that's exactly what happened. We ended up coming back in, filling this. And if I measure this out here, so yeah, right here, see how you measure out this whole range? Guess where we went? To this highest amount of, where these highest transactions were, right here. So this was a giant liquidity pool. I had this marked out, and you can see we went exactly right to that liquidity pool within this liquidity void. So pretty crazy, but that is what happened, right? So we form a buy model, but then we need to make sure we stop everyone out in this range. We come down, stop everyone out. And yeah, I was anticipating this to happen today. In the morning, I was thinking, okay, I see this as a void. This is a giant move higher. I see this as a void. We're probably going to want to go fill this back in, right? And we had this 1 hour for value gap. And going into market open, I'm going to just mark it out like this because this is like the higher time frame imbalance, right? So we have this 1 hour for value gap, and going into market open, we end up sweeping out London's highs. So right here is London. Right here is London's highs. We sweep out London, and we do it with SMT. And look at how this is a liquidity sweep, right? This is what you want to see when you quickly barely pop above an old high, and then boom, it's like that. That was a liquidity sweep. That when you see that, you know that's a liquidity sweep. And so we end up getting SMT with this high as well, right here. And so it's like, okay, so we have really good generated liquidity below, and I'm anticipating this to be generated for later in the week, right? Because taking into account the weekly range, I'm expecting we're going to probably generate liquidity for later. We're not going to run liquidity today. So I was expecting us to go run this here, and then go fill this void and go to that liquidity pool. Remember, wherever that was. It was like somewhere in here, right? This was the liquidity pool. I'm not going to go draw it back out, but you remember I marked this out and I said this was the liquidity pool. And boom, we go right to that area. So we get SMT, we sweep out London, And then right here, we get this 15-minute inverse for value gap. I actually would have loved to have taken this. I'm going to be completely real. I would have loved to take the 15-minute inversion. I'm not opposed to taking trades on the 15-minute. I think as long as you, like, I think that's actually maybe higher conviction because it's a higher time frame play. I like the higher time frame plays. But where is it? Where's L? Okay. So I like these higher time frame plays. We have really good generated liquidity, right? We get S&T within this 1 hour for value gap, and then we inverse this. And you can see we also get internal sweep right here. So internal sweep. And a sweep of London. We get S&T 1 hour for value gap, and then we get a 15-minute inverse for value gap off of it. And now I'm gonna mark it out as both of these candles because it just makes it look cleaner. And then boom, there's that inverse for value gap. And right when you see this, you're like, imagine the rest of this price action isn't here, right? Just cover up that whole other side of the chart from right here on. What do you see? When you see this inverse for value gap, what do you see? You see we're probably gonna go run this. We swept out London's highs, so we're probably gonna go to London's lows. So the way you frame this as a trade is you say, okay, entry right here, stop loss here, TP1 here, and then you could go break even here at TP1, or you could just hold the rest, or you could just say, actually, you know what, I'm gonna take all off at the LRLR. That's where it comes down to personal preference. Like, maybe it's not worth it for you to hold the London. Maybe you just want to hold to the LRLR. Honestly, now that I'm thinking about it, a lot of time you just want to make money. I would just maybe hold to the LRLR here and just take the trade like this. This is pretty high probability, right? You know, we have S&T. We're delivering from a 1 hour for value gap. We swept out London. We're probably at least going to go to this LRLR here. So you can see that's exactly what happened. So you could have this be your TP, or you could have this be your TP1 and then take another one off right here, TP2 at London's lows. So that's how I would frame this trade, right? And yeah, that's 2-to-1 or 1.4-to-1. So then you have to, at this point, right? After we get this move, I was upset because I knew that was the move. Like, I wanted to get in on that. But we already had this inversion happen at like 8:30. I don't get on the charts until 9:15, and at the time I wasn't taking trades until 9:30. Now I'm going to allow myself to take these trades in that first 15 minutes before market open, because I know that's a lot of time. You get an inversion, and then the market open injects the volatility, and then you know what I mean. Like, I'll show you an example of this where we get. So yeah, this was the trade I wanted to get. So let's actually pull everything back up. So if I was able to take this, right, because I wasn't able to, because as per my rules I wasn't trading pre-market at all, but now I'm going to allow myself to take those last 15 minutes of pre-market right before market open. Because this is the second day in a row now where it's happened where I've missed a trade because going into market open there was a good setup. But I'll show you the setup, right? So we're delivering from this. Now, a lot of time you can kind of just conceptualize this as a BPR. You don't even need to go on the higher time frame. This is obviously a BPR because you have a move higher and a move lower. So this is BPR, right? A BPR is an overlapping bullish and a bearish value gap. On the higher time frame, this is a BPR, 100%. So mark this out as a BPR. And then what happens, right? We come up, we end up pushing into this BPR, and then we get an inverse for value gap back lower. So what are you targeting, right? This is a really high probability trade because on the higher time frame, you had the 15-minute inversion. You sweep out London, internal sweep, 1 hour for value gap. This is a really high probability trade. We're delivering from a fair value gap within a fair value gap with SMT to go take out LRLR. So you could take this going into market open, 924, and you could target the LRLR, right? This would have been probably a 1-to-1. I think this would have been the highest probability one, right? Like you literally instantaneously hit take profit. Where's the tool for this? Okay. Yeah, you can see you run this here almost instantaneously. And then, so yeah, you take profit there, right? I like to take profit at the end of the bodies, so like that. And then you can just frame it like this. This would be a 1-to-1, right? We like 1-to-1s. We like making money. Nothing wrong with making money. Now, you could have, at this point, you could have gone break even. You could have just said, okay, I'm gonna hold the runner to London's lows, right? That's up to you. That's personal preference. But you can see that ended up going and hitting London's lows as well. That would have been a 2-to-1. So if you didn't go break even. So very cool. And so at this point, you have to acknowledge, like, what is going on? Now we're just chopping around. This is terrible price action. This is not good. And you have to be aware of that. And so it gets frustrating because I hate framing all these models, and then I get on the charts for AM session and it sucks. And it's like, it's so annoying because I already knew, I totally had this model framed and everything. And it's so frustrating because now look at this. We're just chopping around, blah, 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 blah. And anyway, you just don't trade this. The way you become profitable is you see this is terrible. This is not good, right? This price action is not good. You have to be able to see this and not trade it. Unfortunately, I'm still getting better, guys. But I took one of these inversions, and I think I took this, and it's just not a good trade, and I'm upset about it. Trust me, I'm upset about it. But it's, you know what? We're all in this learning together. Boom, pop low, pop high. Now, here's the issue, right? We close way too high. So we don't get good RR at all. We close way too high. And so what is this? This is like, you're barely getting 1-to-1. You can't, like, it just doesn't make sense to take because of the RR. And also just because of how high you closed. And because it's not an obvious liquidity sweep. There's no really obvious liquidity sweep. So this trade, just scratch it. Like, especially because look at price action right before it. I mean, this isn't what you want to see trade. This isn't how you want to trade. So I should not have taken that. Whatever, it's not a big deal. We're all getting better. And then if you're wondering about this, like, oh, why didn't we go lower off of this? We didn't inverse this. Like, look at this. We did not inverse this for value gap, right? We didn't close below. And then here, this was really good, actually. We ended up getting SMT again, and right, we're still we have to remember what's going on in the higher time frame. We're generating liquidity for later in the week. So we get this inverse for value gap again. And then we go run everything. This would have been a nice one. This would have been a... Man, if you targeted, like, I'd probably just target the end of these bodies. You don't need to go all the way to that low. This would have been a 2-to-1. So, very nice. And you'd sweep out this high, and you can get this inverse for value gap, and you get, you actually get SMT, I think. I could be wrong. Yeah, you get SMT with this right here. With both of these. So anyway, there's SMT here. I like this a lot. I think this was high probability. Easier said than done, though, and obviously, like, it's really easy to get chopped up in this. It's really easy to talk about all this in hindsight, but I'm not gonna lie. Today wasn't easy. Today was hard. Today was a day where you probably just wanted to be defensive, right? Because you had to understand that is bad price action. You want to stick to these higher time frame trades, like these 2 15-minute trades, or in this case, we knew the bias because of the higher time frame for inverse or value gap, so we knew the lower time frame one should probably work, right? So you just have to be really careful on days like this. But you can see we ran all this right here, and then boom, that would have been 2-1. So I think that about covers it for today. Hopefully you found this video helpful, and let me know if you like this type of content and what else you want to see from me. I think that covers everything. Yeah. All right. I will see you guys later. Don't forget to like, subscribe, and check out the completely free Discord. Link to that is in my bio. See you later.